Hi, this is Jay from IntelligentTrendFollower.com, and today I was working on a blog post and I thought I would just make a quick video about it because it's a question I get all the time. What's the hardest part of trading breakout stocks? So I have this really detailed blog post about it of real stocks where I had to overcome this big challenge that comes with trading breakout stocks. I guess let's get that out of the way first. What is the challenge? It's simple, actually. It's just not taking your entry signal and missing out because you're afraid to buy the stock because you feel it's already broken out, it's already gone up too high in price. As an example, let's start here with Shopify. So as you can see, I'm just over at stockcharts.com. Great free charts. I'm just want to show you some charts broken out. Had already gone up in price a lot, 20% maybe. And, I swallowed my fear and I bought them anyways, and it worked out. So I want to just show you this because it's important to understand that stocks that are going up can continue to go up month after month after month. It does happen, and if you can catch these kind of stocks, it's really profitable. Now it's not perfect. You will be wrong now and then. You will get stopped out, but it can work well. So here with Shopify, this is the TSX listed shares that I bought. I picked them up at $48 around here. Shop had just overcome its prior high. I'll turn this on. It had just overcome its prior high. I got in around here at 48. Went nowhere for a while, but I didn't get stopped out. And then boom. Look at that. Now I'm up about 150%. So yeah, just stocks can go up for a long time, and Shop had already gone up. It had run up for like 5 weeks in a row, but I still bought it, and it worked out. So another example to show you is Ferrari. So this is another relatively new IPO. Ferrari had been trending up. I bought shares at 58, I believe right around here. And again, shares had been going up since July. I got involved in around December, January. And, since then, the stock has gone up another 30% over the last 5 months. And I trailed my stop loss up to here. So, a profit is pretty much guaranteed unless, there's a big gap down or something. But, my point is shares of race had run already up for a couple months. And I really felt late to the party, Imagine this part all wasn't here. Shares could have come back down. But I took the odds, trusted my system, and it worked out. Here's a more recent example. ILG. This I just bought the other week in April when it broke out to $21 up here. And again, it had made new highs. It just went from 18 to 21. It's like a 20% move. But I trusted my system and took my entry signal of the breakout. And now shares are at all-time new highs. And I trailed my stop to lock in profits. So you just need to manage risk, and remember, these are weekly charts. So these breakouts are processes that are happening over months. It's not a one-time thing. So here's another example. Vail Resorts. I bought it at 165. Around here, I think, when it was breaking out. Flopped around a bit, sure, but it's the long-term uptrend. In this case, maybe the unique business. It's driving shares higher, and I'm now solidly in the green. Once again, trailed stops to lock in profits, but down here at 165, getting a little volatile. It was uncomfortable to buy, but I trusted my system and I took the signal. The hardest part about breakout trading is, just not taking that signal. So I just have a couple more examples I'll show you, and then I'll wrap this up. Another Canadian stock, Premium Brands, really looking strong. I bought it right here at about $66. Almost got stopped out at one point, but didn't. And then the stock resumed higher and higher yet. But, if I had missed my signal because, imagine this part of the chart, this right-hand part, doesn't exist. And you would have seen the stock go up for almost a year and a half, and you're buying the high. And it's a bit scary, but if you trust your system and you understand deeply the logic of buying breakout stocks and riding these big trends, then it works. So just two more examples. Here's another one, Rollins. I bought this one first at around $32, so about here. It had come up from 29. It's already moved 10% at least. But then it kept going. And then I actually bought more Rollins at 39 here just recently. And it's continued to break out week after week. But again, this buy, I manage my position size carefully, and I have a plan for when to sell and where to get stopped out. And that was a distinct possibility. But it's continued to break out. So that's really my point is in this last example will really show you, stocks that hit 52-week highs, hit them for a reason if you think markets are efficient. And they continue to hit them often, again and again, because, there's a reason, and these trends persist. So, just look at Toro Core here. It was $33 split adjusted in 2015, and it's doubled. And, let's zoom out a little bit further on this one. And I think it should serve the point. Look, it's just a consistent one breakout after another. So, if you're buying breakout stocks and you're buying this kind of long-term sustainable breakout, you don't need to be worried about being late to the party, because the party can just keep going and going. I'll zoom back in to make this a little easier, but I picked up shares of Toro around $41 here after it had made it already a significant move. But notice it continued up, and then I bought shares again believe around here, or no, I guess after this breakout at 51, I got it in at 51.50, so I bought, in the middle of this weekly breakout, and the price hasn't looked back. And again, I've trailed stops to lock in the profit, so I should be able to earn a nice return on this one while collecting dividends. And this really just goes to show that buying breakout stocks means, by its very definition, buying stocks that have already gone up in price, that are going up in price. So, if you feel uncomfortable buying this kind of stock, just maybe you need to kind of get control of your emotions and, practice on paper trading or with small amounts of money and see how it goes. But in my experience, personally, the hardest part of trading breakout stocks is actually just pulling the trigger and just buying the breakout, even though you feel like you're late and you missed it already. And if you do it right, it can be hugely profitable. So, with that in mind, I hope this video helped you understand what the hardest part of trading breakout stocks is. I encourage you to come on over to intelligenttrendfollower.com. Check out, we have free stock picks that we're sharing every week. We have, analysis, free kind of explain. You can get a 12-page mini course explaining my approach to the markets. Publishing new trade ideas every week. So come check it out. Read this blog about what the hardest part about trading breakout stocks is. Come on over, intelligenttrendfollower.com. Free stock picks and free educational material. Thanks very much for watching. I hope you found this useful. Come on over to intelligenttrendfollower.com.